Okay, so for today's class is going to be short. It's because of we have almost 7 questions, 7 assessment. Okay, we have almost 7 assessment. I will be sending out the assessments all shortly in our WhatsApp group. Okay, so the assessments is everything is going to be almost same as this. No differences. I think almost 2 questions is going to be same as question number 1. 2 questions is going to be same as number 3. And then others are going to be like calculations of P&L, financial position, and also some explanation about your irrecoverable debts and everything. Okay? I will post out the questions in the WhatsApp group. Give me about half an hour time. I will read that. So, any questions so far for this class or not? In today's class, the main thing that you have to understand is your format. When it comes to irrecoverable debts, always you begin with your debit. Okay? Whoever is owing you, you will put them in your debit. Okay? And then in your irrecoverable debts, you won't have balance BD, you won't have balance CD, nothing. It's straight away to your statement of profit and loss, and it's a must. Because whenever it's a written off, it's always where? It's always included in your income statement. Okay? And then when you go into your allowable allowance of doubtful debts, you have to find out whether you have percentage or not. This percentage, as I know, can go from 3% to high most, I think that is even sometimes 7%. Okay, but mostly always is until 5. Okay, when it comes to your allowances, remember balance BD will always be in your credit side. But for this question, we don't have an opening balance. Okay, because of don't have opening balance, we straight away put the 2820 into our closing balance. Okay, because of why? The question is saying 31st December. When we know 31st December, it's our closing balance. There is no opening balance for this. That's why it's straight away balance carry downward. And then this side it's already imbang. We don't have to make it anything imbang again. And you have to understand accounts asset equals to liability, debit must be equal with credit. So to make my credit side imbang, I will put it my statement of profit and loss. Okay? And then when it comes to irrecoverable debts, whichever I have been collected, whichever I managed to collect after 1 year or 2 year, first entry is always your bank, because the money came in, that means the money is already in your bank. So your bank debited. Okay, and then our irrecoverable debts sudah kurang. That means it's credit 1,000. This is your first entry for the date that you receive the money. Okay, and then on the 31st of whatever you receive of irrecoverable debt, you will debit your irrecoverable debts and credit your statement of P&L. This is the two essential thing that you have to understand for whenever you manage to recover any debts. Okay? And then suddenly your boss or manager say, next year onwards, our irrecoverable debts is increasing to 4%. So when they increase like that, you as an accountant must have a ratio. Okay, ratio of how much has been increasing yearly for trade receivables. So now from 4%, from 3% to 4%, the differences per year is 1,120. So your expenses is going to be increasing. Okay. Then followed by your question number 2. When you want to key in anything in your statement of P&L, it have to be opening and closing calculation. But only in your statement of financial position, you will take your closing balance only. Okay? That is the two different entry that you will do. Statement of P&L, profit and loss, you will take both. Okay? But for your financial position, you will only take one, which is your closing balance. This part clear? Okay? And then when